In this presentation, we will continue on with our comprehensive problem, this time recording the performance of work on account where we earn revenue. For more accounting information and accounting courses, visit our website at accountinginstruction.info. So in this type of transaction, if we see this in a book problem, again, we kind of got to read the terminology and say what type of terminology will they be using. In practice, of course, we would know exactly what happened, meaning we did work and we haven't yet got paid. We probably invoice the client, expect to get paid in the future, that being a very typical format of the way business structures are for many types of industries. So for example, if we do bookkeeping, we probably oftentimes have to do the bookkeeping, then bill the client, expect to get paid in the future. If we see this in a book problem, it might say something like we did work or we earned revenue on account or something like that. And what that means is that we didn't get paid yet. If we got paid, most book problems would say we received cash for work done. If we didn't, and our real goals here, note what could happen in terms of a book problem. We could do work and get paid later. We could do work, get paid at the same time. Or we could get paid before we do work, or we could get paid for work we had done in the past. So those are all kind of little nuances in terms of wordings. In real life, we would know exactly what happened. In terms of wording, we got to be careful and say, okay, so if a book says on account, typically it means accounts receivable. So if we did work on account or on credit, that means we did work, we didn't get paid. If we are getting paid on account from a customer, that would mean that we had to have done the work in the past, and now we're getting paid for work done in the past, reducing accounts receivable rather than recording revenue. So in this case, we did work, and we basically invoiced the client. We expect to get paid in the future, no cash affected. So if we go through our thought process, then the first question is cash affected? We're going to say, no, we did work on account. We didn't get the cash. Then I usually think about what did we get? We got something. It's a little vague. It's going to be something intangible, that being accounts receivable. We got an IOU. People owe us money. It's still an asset. We're going to record it as an asset here. So we're going to right click and copy. It's not as a tangible or as good an asset as cash, but it's our second favorite asset really because we expect it to be converted to cash soon. We're going to put that here in C21, right click and paste 1, 2, 3. And the amount is going to be for that 12,000. We're going to credit something for that 12,000. I'm going to do that with a little formula, that being negative of this number, taking that number and flipping the sign. Then we just need to put what the account will be. And why are people going to pay us? Because we did work and earned revenue. So here's our first revenue account. We're actually increasing revenue. We didn't get any cash yet, but we did work and earned revenue. Notice that revenue has a credit balance. It only goes up in the credit direction. So this is on the income statement. We kind of like credits. So everything from the equity side, credits are kind of good because we like the company owing us money and we like income going up, and we don't really like expenses. So debits are kind of bad on the income statement side or on the equity side. So we're going to copy the revenue or expense, right click and copy. We'll put that here in C22 and right click and paste. 1, 2, 3. I'm going to indent this, which is probably done for you already, but this is how to do it. Home tab, alignment, increase indenting. If the worksheet's locked, you may not be able to do this cell, but it's nice to know where that's at. Okay, so here we have this. We're going to post this out. Remember, what we've done is journalized the journal entry into the general journal, this blue area. Now we're going to post it, the process of posting, to the general ledger. We could do that by making the screen really small, which I won't do, don't worry. I'm just showing you if you want to do it. Or I keep mine we're currently working at 130 percent of normal. I'm going to use the freeze panes option. To do that, I'm going to scroll to the top. We're going to go to the right just a little bit so that B is flush, and then go to cell K1 and go to the View tab, the Windows group, Frozen Panes, and freeze that pane. And then we're going to, if we scroll to the right now, we can see cell or rows or columns. B through E are frozen. Okay, so now we're going to scroll back down. We want to record this one. Here's the 12,000 in our journal entry. Here it is in the trial balance, our second account, and it's our second account then in the GL as well. So I'm going to scroll just to the right just a bit so it's flush. There's the accounts receivable. So we want to record this 12,000 in the debit side. So in S9, I'm going to scroll down just a bit. We don't even need to scroll. It's in S9, and we're just going to record that 12,000, bringing the zero balance up by 12,000 to 12,000. And then this 12,000 will be used to create the trial balance. If I click just to the left of the frozen panes, go to the right, and it'll pop back over. There's the 12,000 in accounts receivable. We are out of balance by 12,000 until we record the other side, which is revenue. Now, revenue's way down here. It's our first income statement account. It's in order assets, liabilities, equity, and then revenue and expenses. So we're going to go to the right till we find that revenue. So we've got the assets, and then we've got the liabilities, we've got equity, then we've got revenue, which should be down here. So here's the revenue account. We're going to record that 12,000 here. So we're in AF27, where we will say equals, point to that 12,000, bringing the zero balance up in the credit direction to 12,000. Then we're going to go right to the left side of the frozen panes again and scroll right, and it should pop back over. There's the 12,000 we just recorded. So the effect of this journal entry is accounts receivable going up. We didn't get the cash yet, but we have earned it. Why? Because we did the work. We did the work and earned revenue. So revenue goes up not when cash is received, as would be a cash basis, but when work has been done, as is in accordance with the accrual basis. The balance is still in balance here, and our net income is 12,000. Now note that this means that we have 12,000 income, net income. It's not a loss. It's a negative number for Excel, but we see it as a credit, a good thing on the income statement, because credits are good, expenses are kind of bad. Credits minus debits for the income statement, revenue minus expense, 12,000. We can also still see that we have assets here of 128,000. Who's that owed to? Who has claim to that? 16,000, third-party vendor. And then, of course, the rest of this, all of this, including the income statement, is that 128. So the rest of this is owed to the owners, 40, 50, and 10. But what about this 12? Who owns that? Is that part of Smith's, Jones, or Brown's? We don't know until we do the revenue split, because they're going to have to, it might be a 1/3 split. Maybe this should go up by 1/3, or maybe they have some other type of agreement. So when we do the revenue split, we'll break this out. But still, this equity side represents, of course, the owner's claims, the three owners' claims to the assets minus liabilities, the book value of this company or this partnership. For more accounting information and accounting courses, visit our website at accountinginstruction.info.